GM, everybody, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. And we're going to get kicked off here with the higher time frame, the monthly on the S&P 500. So you can see here, this is dating back really to the 2008 lows, and we've been in a macro bull market for the better part of 12 years. Currently, we're printing still this is a bullish candle after a nice reversal off the October lows, but still in a downtrend. We need to get back above this cloud. If we can get back above the September high, that'd give me a lot more confidence right around 410. So still downtrend on the monthly. Weekly time frame, we actually are in an uptrend, but you can see we're printing a doji candle, kind of an indecision candle. But we are technically in an uptrend on the weekly, and you can kind of see that indecision played out here on the daily with these 7 days of uptrend that we've been in. It's been sloppy, but we've still technically been in an uptrend. So, I'm still macro bearish when we have, a declining 200-day moving average still barreling down on the market. You can see it gets acted as resistance here, didn't quite make it up here. And you can see we're still declining, but maybe we're gaining momentum, bull flagging above the cloud to make a push up to this 200-day moving average, currently sitting around 405 on SPY. So, be open to us, trying to see if we can move higher and get some momentum, maybe testing this 200-day. If we can get above that, next level is 410, 411. Yeah, and above there, we're above the 200-day, and I think, we definitely have some gaps to fill. But if we start trading in this area, I think it's you need to be still a little cautious. I know we're still trading. We would be technically trading above the 200-day, above some key pivots. But, this market still isn't set up for a growth scenario. So, like I said, until the Fed starts turning a little more dovish, I think we could potentially see a bottoming process, a bottom in this market. But still, that being said, we are in an uptrend on the daily, and so we're going to be staying long versus stops and looking to add new long market exposure from our playbook with the realization that we're still in a bear market. We need to manage expectations. So we're trading with smaller size, scaling quicker, having tighter stops, because like I said, we're still below a declining 200-day moving average. The Dow Jones has been showing relative strength. You can see we're actually above the 200-day and above the downtrend line from the highs and bull flagging. So keep an eye on industrials. It has been showing relative strength. So that would be your banks, your energy, obviously. Those have been leading, but maybe we start to see a little bit of sector rotation into tech. Right, so this is kind of what we're positioned for. If we do see more of an uptrend, I could absolutely see technology, playing a little bit of catch up. Right, with a rising rate environment, that's typically not good for growth names. Growth names are typically involved with technology. So you can see the Nasdaq has taken a little bit more of a hit. So if we start to see bonds, right, TLT, we're in an uptrend. We're trying to break above this cloud. If we can see bonds start to catch a bid, maybe we could see that roll into technology, and technology QQQ play catch up. Once again, not a prediction, but like I said, if we do see the market, and when I'm referring to the market, I mean the S&P 500. If we see this market want to float higher, could absolutely see technology playing getting a little bit more of a bid than it has lately. As always, got to talk a little bit about crypto. Bitcoin, right? Bitcoin is repeating this pattern of breaking an uptrend line and making moves lower, break an uptrend, move lower, break an uptrend, move lower. So this doesn't look great, right? But like I've said many times in the past, this is a game-changing technology in my opinion. And in the long term, technology is going to win out. And if your time horizon is anything plus 3 years, I think these are fine levels to be accumulating. Definitely not a trade here on the long side. Ethereum, a bit weaker than Bitcoin lately. Obviously, we've seen a lot of forced selling and, well, not necessarily forced selling, but scam selling with FTX and some other people making out with some funds there. But that's neither here nor there. The market's going to find a pivot where it wants to find a pivot. And currently tech along with crypto, which I would say is, leverage tech, really doesn't look great. But like I said, longer time horizons, I think these are fine levels. So going into this week, we're going to be, looking for some long setups, maybe have a couple short setups. But for the most part, this is still just a big bull flag above the cloud. And if we can start to see, prices float back towards the top of this flag, I think it's very easily we could see some gaps that get filled and make a run to this 410, 411 area. So I'll be looking for that to happen this week. If we break trend, right, we always got to play devil's advocate. If we break trend and start closing below this cloud, we could potentially, get people a little more scared and start shaking people out. And if we break below this November low, right, if we break this month's low, then I think that's definitely going to be a signal that this market wants to go much, much lower and probably break these lows that we put in back in October. So we've got, a little bit of downside risk and not too much upside reward. So the risk reward here is not great in a bear market. Okay, so even though we're going to have long setups on the playbook this week, it's important to manage expectations and recognize where we are at in the trend. All right, so I'll see you guys on the open. Take care.